GKFX Prime presents the Market Analysis Webinar.
Hello everybody and welcome to another edition of the weekly webinar. So last week was an interesting one, especially in stock markets. That was probably the most notable move where we just had a complete reversal of that downdraft after the Fed meeting, and now the S&P 500 sitting at record highs once again. So that's very interesting. You know, we had a bearish bias after that sell-off during the Fed week, but you know, once you eclipsed a few of those resistance levels, you quickly realized that actually no, the trend has just turned straight positive again, and that's where we see stock markets for the moment, you know, in positive territory and moving to the top side. All the markets related more directly to the dollar, so the major currencies and gold and silver, to a lesser extent crude oil, they all pretty much went sideways, just consolidated the losses in those markets after the Fed meeting. Potentially some pickup in volatility this week because we've got non-farm payrolls on Friday. So either quiet in the lead up or there's some positioning in the lead up, and that creates some ups and downs. Let's get into some more of the specifics here in terms of where these retracements could actually head in these major currencies and what's next for gold and silver and oil. Starting with the euro. So you can see that, you know, we're still maintaining our general bearish bias in that we've been oversold a few times. We went heavily oversold post Fed meeting, and now we're bouncing back to the point at some point sometime soon. You know, we're looking for some opportunity to sell this rip, sell the bounce on the basis that the trend is still lower. Now, one potential opportunity, you can see the price has pretty much stalled, not really at 1950, but with a few spikes beyond it. And it's holding below, just below, having not tested directly this previous high on the RSI level. This could be it. We've had two failures up here around 1970. So we could roll over from here. A bit of an indication early on in the week that maybe we won't is that we had perhaps a breakdown attempt here, which is then trying to spoil to the upside. So if we're reversing a bit now, it's all a bit uncertain, but I think if we get a more clear downdraft, that's when you can see if you start taking out either this rising trend line or more conservatively, just a point of support through these lows. A breakdown through this horizontal area, then I think you can confirm that the move is resolving to the downside. It certainly could happen. What I'm eyeing though potentially is just more a move up to this supply area here, which fits neatly around the 120 level and the 50% retracement of this drop. So I feel like for those three reasons, that would be a key upside target for bears to be challenged with. You know, if we get a breakthrough there, then I think you can flip a bit more positive on this. Still with a 61.8 and some kind of micro supply area in this decline here around the 61.8. That's just a bit higher, 120.37 and change. But basically, we've had a retracement. This could be it, but I'm not convinced because I don't really see particularly the importance of this 1950 level. But you know, I'll accept the market action if we get a breakdown through support. Whereas if we get a move up to 120 with some major resistance overhead, then I think that would be, you start looking for reversals right in that area as soon as you can for the best risk reward. That's the way we are playing this euro trend at the moment, and similar for the other major currencies, which I'll move on to now. Moving next into sterling, you can see another one of these examples of a bit of a kind of false breakdown. We broke lower, but we've spiked up right early on Monday, and now we're easing back off through those spike highs. So if we close the period down here and then start taking out this low down here, which again, the trend line was kind of the first clue, like the early clue if you like, and then this is just the horizontal support. If we drop down through there, then I think we're in business. Sterling is a different situation in that I think we saw a bigger relative bounce than we did in the euro, and it's already run into this supply area, and this supply area, pretty good, had a small bearish reversal candlestick in the supply area. If you weren't happy with that, you had the second attempt with a retest into the area and a big dramatic down move now, and then a few opportunities through here to kind of sell into maybe half or so of that little down move there. So at this stage in the game, probably again we need the confirmation with the break lower. But we're looking at the fact that we've been most recently oversold and we've not been overbought for a while. It shows the market's weak, and we generally want to be favoring orders to sell. And so we've got a support that we can break down through here. And then if I click out of the chart automatically ticking forward, you can see we've got some demand areas down here to target. The big one would be basically 137. If you look at our daily chart, you can see them a bit more clearly. That's the kind of double bottom which prompted the rally up to 142, and that's, you know, really it makes sense that having put in this double top with a big move right down towards the lows, that we at least test. I mean, the top of the highs is flat, so it would make sense that you know, it's not sloping. It would make sense that we come down and test the neckline at least, I would have thought. So we've been oversold once on the daily basis, but you know, can we come down and be oversold again, or is the correction done? You know, that will be the question moving forward. So more inclined to think that this correction is already done in sterling, but sterling is just more volatile in general. You know, maybe if we can hold this support, we rally up and we just get another test of this supply up here and roll over again. That's potentially a scenario. Is if the euro pushes to the top side, maybe sterling just holds the same level, then drops. Moving on to dollar yen. So, that's shifted out of place a little bit. But here the trend, you know, it's acting differently to these other currency pairs as we noted last week. Very much in a kind of an upward trend, but you can see from RSI that it's a very steady uptrend, you know, with some big down moves and then some slightly bigger up moves, giving the whole thing a bit of an upward bias. And we've been holding above the 35 level on RSI pretty consistently. More recently, you can see there actually was some bearish divergence here. So we made a higher high on the price, but we made a lower low on RSI. So it still went overbought, but just not quite as aggressively so. But you know, that doesn't have to necessarily mean anything. We've got something kind of similar here, and you know, we've got a decent sell-off. We even took out this low, but the uptrend resumed. So maybe something similar on the cards again, where we've already had a bit of a correction here. We don't seem to have bounced out of off the previous high. We haven't kind of immediately made it through this longer term area of resistance, which is this kind of double top threatening action here. So, you know, big moves up, only small moves down. I think the trend is still up, so we assume the uptrend resumes. But you know, it's, you know, we have got this bearish divergence that's kind of interesting. If we get another breakdown through the lows, you know, we can be more confident about selling it because we know it's in the context of this bearish RSI divergence. And I think what would really flip us bearish is that there's a fairly consistent trend line. It depends how you draw it, but it's roughly along those lines. A breakdown below the trend line, and equally, I think it would probably happen at about the same time, would be a drop through this horizontal line of support through RSI, and taking us into oversold territory on RSI. You know, with that, and that would tell us that the market's weak, and we want to be selling into the weakness. Okay, flipping over to commodities now. Let's have a look at gold. So kind of interesting in gold in the RSI, sometimes you get these very perfect looking trend lines in place, and we've got that, and so far it's holding. And so the general context is that we've been oversold, and we want to be assuming the weakness continues until we get that sign of strength with a move through 70. We're well below the previous peaks here, which came in around 60. So gold still looks very weak. And if you compare, this was the decline after the Fed, and if you could compare it with, say, the pound came up and challenged this, you know, this supply area up here, kind of an equivalent of the euro didn't quite make it. But if you're comparing maybe the pound, the euro, and gold the weakest of the three for sure. It's not to say it can't bottom out here. 1770 to 50, it's kind of a big area, but it does look like it probably wants to drop lower once more. And if that's the case, we've got some demand areas coming through here, and then we've got that big double bottom again coming through the lows here. And still, overall, we mentioned this last week, that overall the market's still kind of trending in a sideways downward kind of motion, despite that kind of rally that we had through March through April. It's seeing a big retracement of it now, and it's sort of for the time being, we certainly could have based here. This is the 61.8% retracement level, I think. That's what we had it on last week. So we are at the 61.8, but you can see the next level of support and this demand area down here is the 78.6, and maybe we need to drop to that first. But it's pretty straightforward trading. I think at this point we're looking for a breakthrough. It's a consolidation area. We're looking for a support to break down to trade to the next Fibonacci level down there, or we're looking for the in this horizontal range, we're just looking for the highs to get taken out. And move through that 50% retracement level to assume that we can have actually a bigger correction towards that 20 DMA. So certainly a potential that gold bottoms, but it doesn't, to me, look like a bottom right now. The market looks soft. It looks like it's going to break lower. But again, as we mentioned at the outset, will probably depend on expectations around that non-farm payrolls report and how the dollar moves. That's really going to be critical for gold. Similar deal in silver. We actually had quite a nice triangle pattern, which we outlined in one of the daily reports, I believe, which kind of is broken down a little bit. And I think, that can sometimes be the case with these triangles. When you run too far inside the triangle and it gets more than 2/3 through the triangle, the pattern tends to break down and not be quite so reliable. Interesting on the RSI with this kind of rising line through here, which can be quite consistent for a break lower, coming ahead of the price breaking lower, but actually we kind of snapped back above that little trend line as well. So silver, same situation in that we've been oversold, we've not been overbought for a while, big sell-off, consolidating near the lows after the big sell-off. All that speaks to a generally weak market, and we're just looking for some signs of strength coming back in, but we haven't seen it just yet. Only this, if I zoom in a bit, that bullish engulfing that happened this morning, that was kind of encouraging, where we had the breakdown through the triangle and then we snapped up again. But I would say it's probably just a function, not necessarily so much of strength of silver, and not even necessarily weakness of the dollar, but just kind of a bit of uncertainty, a bit of jostling for position before that big data release this week. So if this is anything to go by, probably a sideways market where you don't really want to be selling the breakouts, buying or selling the breakouts. You probably want to be trading the range, and unless some other kind of news breaks. All right, let's move on to our last commodity here. That's oil. Now, obviously, we're looking at WTI here, but the big one was that Brent hit 75, which is quite a big round number. And what we can note from the RSI, interesting, is that the price has been trending higher for a while, but the momentum has been getting gradually weaker. And then that's what you expect in an uptrend. But interesting, more recently, we've not even been able to push into the 70 overbought level. So it seems like this oil market's weakening, and we've just tagged that big 75 level in Brent, and we've got the makings of a small double top here. I think it's a bit early in the day to call this trend reversal, but I think you can cautiously be buying into the trend here. But I think you've got to be wary that this is probably going to snap pretty soon, this uptrend in oil, judging by this weak momentum and potentially a double top around 75 in Brent. And what are we here in? We did get above 75, but that's just a round number. 74 in WTI. So, who knows? We could actually nudge a bit higher up to there. I've got it on the chart there. Ooh, it's very difficult to get that we could nudge up to 75, spike up to 75 even, and then that might be the top. So look out for some sort of topping. Can't predict in advance what it's going to be, but if we had a big spike up to 75 and then turned lower again beneath these highs, that'd be a very powerful reversal. Or just simply this is a double top and then we maybe get a drop through the rising trend line below the 20-day moving average. Then obviously the price is lower, but it's a bigger confirmation of weakness. Be different ways to play this. I think you assume the uptrend continues, but kind of knowing it's on its last legs. So as we mentioned, the S&P 500 here up near record highs. Very it's a fascinating market, because obviously that was the sell-off. It did have one leg, then a recovery, then the so sort of an A, B, C. So in fact, it's not completely uncharacteristic trading to have that kind of deep sell-off and then rally straight back in the general context of an uptrend. It's not so crazy, but it is a little bit in a way, because look at that. Just, it's really a V bottom, and we weren't able to capture any of this initial move. But I think once you see this, just with the benefit of hindsight, you see a big move low, you're expecting the market to kind of roll over at some point. It comes right up to your supply area. You're looking for sells, maybe even take one off that first candle, but then when it reverses up, you've got to quickly change your ideals and think, okay, no, this market is strong. Moves up, and then actually this was a pretty good opportunity. We saw it take out the resistance very strongly, came up back through the old previous record high, consolidated, and then broke up to the top side. And this move was capturable, and it's still in play now. Only extra thing to note is that we have just pushed into overbought on a 4-hour basis on the RSI for the S&P 500 for the first time since early May. So almost 2 months of this kind of choppy uptrend, and now we've finally gone overbought. So ordinarily, I would say after a strong uptrend, and then you finally go overbought, then it couldn't be an oversold sell signal. I think on this occasion, actually, if you look at this market, it pretty much has been sideways. Apart from we had big drops down, and then we had a period of just kind of nudging higher towards the resistance, a false break, and then that big move lower, and then finally we've hit that overbought. And to me, that's probably a sign. Most people take it as a sell signal. For me, it's probably an indication that this market's finally starting to look strong again. And if we are pulling back, it'll probably be to the old high. It might be down to this level again. If those two give way, then okay, fine. We've had another false breakout. We can expect probably another deeper correction. But to me, this is the market showing actually some strength now. Last but certainly not least, Bitcoin, very interesting here. As we've mentioned on several occasions, I kind of like this idea of if you can buy, there's a trade opportunity here, which we don't know if it will play out, obviously, but if you buy Bitcoin around 30 to 33,000 and you ride it to 100,000, that's a 3-to-1 trade, risk to reward trade. So even if, just assuming Bitcoin, you buy it at 30,000 and Bitcoin just goes to zero, that's your one risk. But if you're holding it to 100,000, that's your 3. So 3-to-1 probability. Of course, we don't know which one will work out, but it's kind of nice to have those kinds of risk rewards on your trades. We've more specifically on the current situation, we potentially got a double bottom. I mean, it's fairly clear cut with these moves below 30,000 being the big number. More interesting on a kind of micro level, we had a failure at the first high was not quite 35,000, but it's actually really is 35,000 it's kind of dealing with here. 35,000 is about there. So these two highs were 35,000. Where it currently sits is pretty much 35,000. And what was interesting is this is kind of what you like to see, is that the market comes down, it takes out the low, people think, okay, time to sell, and then it just rips back up again. This happening here, this false breakdown, is a very bullish sign. Now we've come back up to resistance. We're challenging the resistance. I mean, this looks kind of good in Bitcoin. Maybe it's just volatile and exactly the same thing happens on the top side. But if you have a bias towards wanting to buy, then obviously you take the bull, the buy signals. If you have if you're bearish and your tendencies to want to sell, then you take these sell signals, and of course they will not always work. But what I'm saying to you is that there has been a sell signal that failed. That in itself is an indication of bullishness. Now we're approaching a potential breakout to the top side as a breakout buy signal. That of course may also fail, but following this week's signal, and if you want to be buying anyway, again thinking maybe around the idea of having bought into this big dip in Bitcoin, it's a 50% retracement. If you like Bitcoin overall, there's a few arguments to be had for looking for this breakout trade here. What else would I say is that it's just a bit of a choppy sideways market, so it is prone to false breaks, but you've got to be in it to win it. Okay, I'm going to leave it there. Thank you very much, everyone. Thank you very much for coming. It's much appreciated. Please do show your thanks as well by clicking the like button, clicking the subscribe button, even click that bell notification button so you'll see when the next webinar is released. Thanks, everyone. Good luck trading this week.